Hello and welcome to another video. Today we're going to be talking about top-down analysis. So in this video, I'm going to show you the process of top-down analysis, explain what it is and why it works so well, and how you can actually use it in your trading to get better results. So what is top-down analysis? Well, top-down analysis is the act of moving from the high time frames to the medium time frames to the low time frames. And by doing this, you're going to get a view of every single time frame and the direction on all of the different levels of high time frame, medium time frame, and low time frame. Okay. So why is it good? Why is it actually good to carry out top-down analysis? Well, the top three reasons and the three reasons that really matter are: it improves your trade accuracy by keeping you in tune with the high time frame and low time frame analysis. So when you're executing trades on the low time frame, you know why reversals are going to be happening at certain levels ahead of time. Sometimes it can be easy to actually be on a low time frame, be targeting a high target, and then when you actually view the higher time frames, you'll see that there is something that actually is, either blocking price or is likely to pull price lower. So if you actually didn't look at the high time frame, you're going to lose a trade or you're not going to reach your target and you're going to get confused. Why did this happen? Whereas if you actually know the high time frame analysis, you'll know exactly what the market is doing on all time frames, and you'll know exactly why the market is making some movements that you may otherwise not understand. Top-down analysis also adds clarity to your trading. What I mean by this is obviously keeps you in tune with every step of the market. Sometimes trading can be a bit choppy. If you're looking at just one single time frame, you don't know exactly where you should be targeting sometimes, or exactly where your entry should be coming in. Even as well, if you're trading on the higher time frames, like the daily or the 4 hour, and you're trying to enter off those time frames, your entries are not going to be very good. You're going to have huge stop losses. So you can actually get a lot more clarity by using top-down analysis, because it means you can get your overall view on the higher time frames and then scale down to the lower time frames for a very pinpoint execution. Top-down analysis also keeps you one step ahead of the market at all times. By understanding where the high interest zones are on the biggest time frames and the smallest time frames, you're going to find other opportunities and know exactly where you want to be buying and selling from in the future as well. Rather than just focusing on this one current trade, you get an overall view of the market and you know where you want to buy, where you want to sell for the next, 2, 3, potentially 4 even trades ahead of time from where you are right now. So they are the reasons why top-down analysis is so good. What I'm going to do now is take you over to the charts and show you how to do this top-down analysis, the whole method of it that I use, and why it's so useful in your trading. Step 1 of top-down analysis is the high time frame overview. So starting out, this is what I normally like to do at the start of each week, is jump on the weekly chart and analyze the pairs from there. Now, what this does is give me the overall direction of a trade. Obviously, based on the fact I trade anywhere from the hourly down to the 1 minute chart for my entries, I'm never really going to be using weekly targets as such for my trades. But if I actually go on the weekly and identify the direction from there, what that does is give me a good idea of the areas of reversal that I can then scale into. So here we are on GBP/JPY on the weekly chart, and as we can see, we've got here pretty much downward motion. Now, the main focus for me is going to be actually viewing what the market's doing on a higher time frame perspective. Now, as we can see, we had a big bullish run, forming higher highs and higher lows all the way up to this point here. When we hit that point, we had a big drop off. Now, this big drop off was where the trend really shifted from an uptrend. So if we mark this off, to a downtrend. Okay, we can see this break of structure, multiple breaks of structure here, 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 and so on. This was, by the way, all the way back in 2014, 2015. So we're not going to be using 2014 and 2015 data for targets, in my style of trading at least. But what we can do is identify the super high interest levels that are likely to form reversals in the market or are likely to be very meaningful breaks. So we've seen the break of structure. From there, we did really come down and form a very, very much lower low than all of this previous price action. And if we actually look at how the market's been moving, from this lower low, we formed a lower high in the weekly trend, and then we formed equal lows down here as well. Okay, so we didn't quite go lower. I mean, we did by just a very slight tap lower there on the weekly chart, but we're essentially forming relatively equal lows, but we are consistently forming these lower lows and lower highs. Now, this drive up that we've got here, while it could be seen as a break of structure there, what I'm really focused on the weekly chart are the meaningful levels. So if we actually have a look at areas of supply this one being a very meaningful area of supply, because this came out of this very meaningful supply zone here. We can see until this high is broken, we are still in a weekly downtrend. Okay, so what this actually does is allow me to then look at this on the daily perspective and see, is this a good point for the market to reverse? And if it is, we may have a short trade on our hands. And if we do get a break over this meaningful structure, we can then actually identify long positions. So shifting down to the daily chart now, knowing that on the weekly time frame we are essentially in a downtrend. The daily is uptrending a little bit, but with that big weekly region of supply above, we can expect that if the market doesn't surpass that level, we can actually look for shorts. Okay. Now, a great thing as well about this is we are looking to stay unbiased. We don't want to gain a solid bullish or solid bearish bias. We just want to see what the market is doing. And keep our mind open at all times, because we may be able to get buy trades, we may be able to get sell trades, whatever the market gives us at the time. So refining to the daily chart, we can see I've refined that supply zone to this very clear little supply area at the top, which is the extreme supply zone. Another nice thing to mention is we have imbalance here, which is untested, completely untested imbalance. So it's likely that if the market is going to move down, it's first going to move through this imbalance, trade into that extreme supply zone, and then begin rolling over from there. As we can see here on the daily chart, that is just what we've done. We've tapped into the midpoint, which is exactly what I like to see, of that supply zone, and we are now looking to lose momentum. So with this lack of momentum, after filling an imbalance and trading into the midpoint of a daily supply zone, we can come to the conclusion that if the market on the lower timeframes gives us the confirmations, we can actually look to bring GBP JPY lower. So the next thing to do is move on to the medium timeframes to actually find a setup formation, and then it will be the low timeframes for an execution. So here we are on the hourly chart, and what we can now do is remove this higher time frame supply zone from the chart just to keep it neat, because we know that this is the area that we're looking for a reversal in. So focusing on the time frame price action where we are now, we can see that after this big bullish drive, we did begin to lose momentum. The market was grinding very, very choppy, very, very sideways. But all of this is what we call efficient pricing. There are no imbalances in the price. Every single time we've moved down, we've come back up to fill it, and vice versa. What is also clear is that we are moving in a downward fashion, and we have actually broken this previous structure point here, which is a very extreme structure point, but it's the first area where price really stalled after the large impulse move up. So we've had this break of structure now, very meaningful. We've also had these other breaks of structure, of course, in the same fashion where we've actually gone and broken through the recent lows formed in the market as well. So what the hourly chart is telling me is that we have efficient pricing rolling over from the top, a very big lack of momentum. We have absolutely no strength to continue to the upside. We are also breaking structure to the downside. So this further adds confluence to our short idea. So what we can do now is identify a good area of reversal. For areas of reversal, I like to use imbalances and supply zones. Well, throughout here, we have no imbalances, we have no supply zones. The first point in which imbalances and supply zones come into play is this area here. As you can see, we have had this drop down, which hasn't been retested yet. So this consolidation area just above that, this region here, is the first real supply zone of interest to actually begin identifying a short trade. And that is exactly what I'll be doing. So what we can now do from here is wait for price to approach this region and see how it reacts when it does. So once price trades into that supply zone, I will be dropping to the lower time frames to actually see what we can do in terms of an execution. And as you can see, we've done just that. So we are now here on the 10-minute time frame. You could also use the 15-minute time frame or whatever's suitable for you. So on the 10-minute time frame, we can see that 1 hour supply zone has been tested. We've now traded right into the midpoint of that region. And as we can see, we've got a few structure points of interest. As previously mentioned, we want to look for what? The high interest, the high validity break of structure. When we get a meaningful break of structure, that is when we can then begin looking for trade executions. So the most meaningful structure point for me is going to be this region here, where we've had this big push down, a nice formation of a higher low. If we can break that, that's going to tell me that the market is ready to make some downside movement. So just watching price play out, see how it goes. We do indeed get a break of that structure where the market actually comes down and forms a lower low. What's really nice about this one is we've also had market closures, meaning we've closed bearish lower than these previous wicks. So if we were to focus on the closures, we've closed considerably lower. This shows that there's a lot of downside strength in the market because none of this price action was rejected and we were actually able to close all the way down here. What this is now telling me is that if we can move back up to this point, we'll likely be able to sell GBP JPY down. If we look again, same concepts, imbalance, supply zone, that for me is going to be the area in which I'll be looking for a reversal. So what we do now is scale to the lowest time frames to actually find at execution for a position. So for my trade execution, I will move down to the 5 minute, the 3 minute, or the 1 minute. In this example, the 5 minute chart is perfect. What we can see here is the break of structure that we are focusing on. We can also see the price imbalance, and we can see what I've amended to be the 5 minute supply zone. So what we're looking for is a push up into this region to then sell. Now, remember how we've actually brought this all the way down from the high time frame through the medium and now to the low time frame, and how much confidence and how many confluences this gives us to actually take our trade without any hesitation and without any worries about whether or not we're on the right side of the market. We've seen the high time frames, we've seen the medium time frames, and now we're seeing the low time frames. So if this comes together along with the other two, we have a very high probability setup on our hands. Now, one final thing I noticed as well, as you'll know from my other videos, if you do follow me regularly, if you do want to learn all about it, you can do so by going to the link in the description. Talk about that at the end. What we've got is these two equal highs here forming liquidity. Okay, so we've got a lot of liquidity above this level as indicated by those equal highs in the market. Now, what that means is we cannot write this trade off if we do get a breach of this level, because it will simply be a push for liquidity. So just as an indication, I'll mark that red box out. Essentially, we have a lot of stop losses here from people selling at this level and at this level. General retail sellers using the stop above the high methodology. And for that reason, yes, we do have this high probability supply point, but if the market does come through and pierce this level, we will not write this trade off as, a break of structure and a shift back to bullish momentum. So allowing the market to move towards the supply zone, we can see that we do get that reaction. We do indeed get the liquidity push, and then we get the start of a rollover. So this is where I would really begin to scale down and find the low time frame entry opportunities. And down here on the 1 minute chart is exactly where I'll be executing my position if some criteria are met. So what we would like to do here is actually find the structure again. We use the same methods across all different time frames because the markets move in a fractal manner, which means we essentially get exactly the same supply and demand zones, liquidity, imbalance, and structural movements on the weekly, the yearly chart even, as we do on the 1 minute chart. So we're here on the 1 minute chart, we have our meaningful structure low marked out. If we can go and break this structure low, that is then going to give us what we need to begin identifying shorts from any supply zones we can find up here. So allowing the market to play out, we see that we do indeed get that break of structure. And what we can do now is identify the supply zones and begin executing some positions. So for this move, as we can see, we do have efficient pricing here. The first real small imbalance area is where we get this big drive down. Now this doji indecision candle could therefore mark out a supply zone. And what we'd be looking to do is execute somewhere off of this supply zone. Generally, I'm going to go with the low point when I'm taking a trade like this. Targets are pretty extended, so we'll get to that in a moment. We have a first execution there. This isn't actually the execution I took, however. I took an execution that I'm going to show you in a minute, which is indeed, after this push down, I marked out this supply zone. I recognize that first bounce, but being the imbalance price area, this is the one that obviously is high probability and fits inside of my strategy. So we have here an imbalance into this little supply zone. So what we would look to do is execute a short from that level, but that target's much lower. Now, in this instance, you could have gone ahead and actually placed a very tight stop, over these zones. But obviously, with this doji indecision candle, I opted to actually hold a larger stop into the highs up there. Very nice to see again another break of structure. Trade was tapped in and quickly ran down with next to no drawdown. And as you can see, bringing this back to the higher time frames, we traded perfectly down into targets which were set at a 30-minute demand zone. Now, the reason we target this level, we have a large impulsive move here, and this is the first region of demand to the downside. So this is really the first area where we are likely to form a reaction in the market. So as you can see, very successful movements here in the market and a very successful trade. Thank you to top-down analysis. So once again, that's high time frame to medium time frame to low time frame, identifying all of the high probability levels and executing with the most pinpoint manner possible. Hope this video has brought you some beneficial information, and I hope that you can go ahead now and trade with clarity, confidence, and always staying one step ahead of the market.